Hi everyone, today we'll be going over accounts, May June 2020, paper 1-1. This is a multiple choice paper which consists of 30 questions, each of 1 mark, and we are also given a time limit of 1 hour. So without any further delay, let's get started. The owner of a business purchased a camera to take some photographs of her family, and she wishes to include it as an asset in the financial statements of the business. Her accountant says that she should not do this. Which accounting principle is the accountant applying? So the very first option we have is business entity, and the business entity principle states that transactions associated with the business must be separately recorded from those of its owners. And in this case, we can clearly see that the camera was purchased by the owner for her personal use to take the photographs of her family, which means that this is not an asset that is used in her company. Due to this reason, the camera should not be included as an asset in the financial statements of the business. So clearly, the accounting principle applied here is the business entity one. This is the correct answer. But let's go through the other options as well. The second one is consistency, and the consistency principle states that accounting principles or methods should be followed consistently in the future once adopted. But in this case, we are not talking about any accounting methods or principle. So obviously, second option is incorrect. The third one is going concern, and this assumes that a company has the resources to continue making enough money to stay afloat for the foreseeable future. And in this case, we're not talking about the future of the business. We are talking about whether or not to include an asset purchased by the owner for her personal use in the financial statements of the business. So clearly the third option is incorrect as well. And the fourth option we have is realization, which states that revenue can only be recognized once the underlying goods or services associated with the revenue has been delivered or rendered. And in this case, we are not talking about any sort of revenue. So clearly our fourth option is incorrect as well, which means that the correct option for question number 1 is still going to remain option A. Now we can move towards the second question. We need to figure out what are the characteristics of a non-current asset. So the very first one is they are not intended for resale, which is very true, because if we are talking about any sort of business, maybe they could purchase some other goods intended for resale, but non-current assets is not one of them. The second statement we have is they provide future economic benefits. This is true as well. Let's talk about machine, right? So machine helps in producing goods that could be sold in order to generate revenues, which can be categorized as an economic benefit. So the second character is true as well. And the third one we have is they prevent the company from going out of business. But this is not true, because like I said before, machineries can help produce goods, but whether those goods will be sold or not is not going to depend on our non-current assets, which is the machinery, due to which the third character is going to be incorrect. So the correct ones are 1 and 2, which is given in option A. That will be our correct answer. Now we can move towards question number 3. A business has a year end of 31st December. It depreciates its motor vehicle over 4 years using the straight line method. And a full year's depreciation is charged in the year of purchase, but none in the year of sale. Alright, a motor vehicle was purchased on 1st July 2016 for 18,000. So this is the cost of the motor vehicle, and it was bought on the year 2016. And this also had an estimated residual value of 4,000, and the motor vehicle was sold for 5,000. This is the disposed value or the sale proceeds on 31st December 2019. Okay, I'm just going to create a timeline here. So this is the year 2016, 2017, 2018, and 2019. And we are told that the motor vehicle was purchased on 1st July 2016. So this is somewhere here, right? But we are also told that a full year's depreciation is charged in the year of purchase, which means that we charge depreciation for all 12 months for the year 2016, right? And so is the case for 2017 as well as 2018. But if we're talking about the year 2019, we know that we are selling the motor vehicle at the date of 31st December 2019, right? And we are also told that no depreciation should be charged in the year of sale. Due to that reason, we won't be charging any depreciation for the year 2019. So the only years that we need to charge depreciation would be 2016, 2017, and 2018. Okay, and we are told that we are applying our depreciation using the straight line method, and under this method, the depreciation charge for each of the years is going to remain constant, because we will be applying the rate to our cost. But in this case, we are not given any rates, but we are given the estimated use of the motor vehicle as well as the residual value. So we can easily figure out our depreciation charge for a year. And that is going to be our cost, which is 18,000, minus the residual value, which is 4,000. And then we divide it by the number of useful years, which is given to be 4 in this case. And this gives the depreciation charge for a year to be 3,500. Alright, we are asked to figure out the profit or loss on disposal. And in order to figure out the profit or loss, we need to compare our sale proceeds, which is 5,000, to the net book value. And in order to figure out the net book value, we require our accumulated depreciation, right? So the accumulated depreciation in this case is just going to be the sum of depreciation for the 3 years, 2016, 2017, and 2018. And we know that the depreciation for each of these 3 years is going to remain constant at 3,500. So in order to figure out the accumulated depreciation, we can just multiply the depreciation charge for a year by 3. So that's 3,500 times 3, which results in our accumulated depreciation to be 10,500. Now we can easily figure out the net book value. Net book value is just the difference between the cost and the accumulated depreciation. And in this case, we have our cost to be 18,000. So our net book value is going to be 18,000 minus 10,500, which results in the value of 7,500. Now, in order to figure out the profit or loss, we need to compare this value with the sale proceeds. And in this case, the sale proceeds is 5,000, which is obviously lower than the net book value, which results in a loss, right? So the loss is going to be the difference between net book value and the sale proceeds, which in this case is 7,500 minus 5,000, which results in our loss to be 2,500. So this is the answer that we will be looking for. And 2,500 loss is given in option C. That's our correct answer. Now we can move towards question number 4. The following information is available in respect of the purchase of a new machine. Alright, the business plans to keep the machine for 5 years. So this is the estimated useful life, and it is expected to be sold for 5,000. This is the residual value. Now we need to figure out the annual depreciation charge using the straight line method. Like I said before, the annual depreciation charge is just going to be the cost minus residual value divided by the useful number of years, right? So we already have our residual value to be 5,000 and the number of years to be 5. We now need to figure out our cost of the new machine. Okay, so for cost, we are given the machine cost to be 80,000, but we are given 10% trade discount. And remember that the discount that we record in our financial statements is the cash discount, not the trade discount, due to which reason we will not be considering the trade discount, and the value after receiving the trade discount will act as our cost. So the cost in this case will be 72,000. Then we are also given the delivery cost. And remember that delivery is something that is to be done only once, because once you deliver the new machine, it does not have to be delivered time and again, due to which we can categorize it as a non-recurring expense, right? It does not occur more than once, and that is the reason why we can add it to our capital cost. So we just add the value of delivery cost of 1,200. Then we have installation cost. Again, this is the same explanation as of delivery. Once the new machine has been installed, it does not have to be installed time and again, due to which it is a non-recurring expense. And non-recurring expenses can be categorized as our capital expenditure and added to our capital cost. So we will be adding this amount of 1,800 as well. And finally, we are given annual maintenance cost. Remember that this is annual, which means that this cost will be recurring every year. So obviously this is a recurring expense which should be treated in our income statement and not be added to our capital cost. So this is just going to be the total cost for the new machine, which is 72,000 plus 1,200 plus 1,800, which results in the value of 75,000. Alright, now our depreciation charge for the year would be cost, which is 75,000. Minus the residual value, which is 5,000, divided by the number of useful life, which is 5 years. And this gives our annual depreciation charge to be 14,000. This is our answer, and this is given in option B. That's the correct answer. Now we can move towards question number 5. What does the debit side closing balance carried down and credit side opening balance brought down represent in a sales ledger control account? Okay, so this is the debit side, this is the credit side, and we're told that on the debit side we're talking about closing balance carried down. So that is just going to be our balance CD, right? And remember that the closing balance carried down for the debit side acts as the opening balance brought down on the credit side. So this acts as our balance brought down, which means that we are talking about the same thing for both of these items, right? Debit side closing balance carried down will be equal to the credit side opening balance brought down. And we are talking about this balance in our sales ledger control account. So the closing balance on the debit side for any sales ledger control account always represents the amount that we owe to the customers, right? So we're looking for owing to customers on both of these sides, which is given in option D. That will be the correct answer. Now we can move towards question number 6. The trial balance of a business did not agree and a suspense account was opened. The following errors were then discovered. Now we just need to figure out our opening balance in the suspense account. We know that these three are the errors, so I will be rectifying it in the trial balance. So that's the debit side and the credit side. The very first error that we have is the sales journal total of 9,150 had been credited to both the sales account and the sales ledger control account. Okay, so credit to the sales account is actually the correct recording of this transaction, right? But credit to the sales ledger control account is the incorrect one. So we should not be crediting it. We actually require this balance of 9,150 on the debit side for the sales ledger control account. So if this has been recorded on the credit side, now in order to rectify it and represent 9,150 on the debit side, if you record it once, both of these balance just cancel each other out. So we need to record the 9,150 twice on the debit side so that once it gets cancelled out with the error recording, whereas the next one represents the actual balance for the sales ledger control account, right? So I'm just going to write down 9,150 on the debit side twice. Then for the second error, we are told that the purchase journal total of 3,450 had been entered correctly in the purchases account, but as 3,350 in the purchases ledger control account. Okay, so the purchases ledger control account has actually been understated because it should have been 3,450, but we only recorded 3,350. Let's figure out the understatement amount. That's 3,450 minus 3,350, which results in 100. So 100 is yet to be recorded in our purchase ledger control account. And remember that purchase ledger control account has a credit balance. So we are going to enter this 100 on the credit side in our trial balance. So that's going to be 100. Now for the third one, motor expenses of 6,450 paid by check had only been entered in the bank account. But this should have been also entered in the motor expenses account, right? And whenever we're talking about trial balance, the expenses are always recorded on the debit side, which means that we need to record this amount of 6,450 on the debit side as well. Okay, this concludes all of the errors. So let's figure out the total. Obviously, the heavier side is the debit side, so the total is going to be 9,150 plus 9,150 plus 6,450, which results in 24,750. And this is the total for the credit side as well. Now, obviously, our suspense account is to be recorded on the credit side, and it is our balancing figure. And whenever we're trying to figure out the balancing figure, we just subtract this amount from the total. In this case, that's 24,750 minus 100, which results in 24,650. And remember that I actually rectified all of these errors and obtained this value as the balancing figure on the credit side. But we are requiring the opening balance in the suspense account before rectifying all of these errors. So this amount would be on the opposite side as the opening balance in the suspense account, which means that the opening balance is 24,650 on the debit side. This is the answer that we are looking for, and this is given in option D. That will be the correct answer. Now we can move towards question number 7. A bank statement showed an overdraft of 750 and the following was then discovered. Okay, so these are the errors and we need to figure out the amount of overdraft which should appear in the statement of financial position. We are talking about a bank statement, so I'm just going to create the bank statement right here. Okay, always remember that the debit side in a bank statement represents all of the cash outflows, whereas the credit side represents all of the cash inflows. And for our opening balance, we are given the overdraft, which is something that we need to pay. So we can see that this amount of 750 actually represents the outflows to be made. So I'm just going to record this as 750 debit side. Now I'll move towards rectifying all of these errors. So the very first one is that a check issued means we are paying it. So this is an outflow as well, right? in payment of rent for 570 had not been presented. So since this has not been presented yet, we need to include this 550 on the debit side since this is an outflow. So that's 570. Now for the second one, we have a check for 624 received. Received means that this is an inflow, which should be recorded on the credit side, was not shown on the bank statement. Again, since this is not shown on the bank statement yet, we should be recording this amount on the credit side. So that's 624. And the third one is that the bank statement included a bank charge of 50. So bank statement already includes it, so we do not have to do anything regarding it. But it had not been entered in the cash book, and since we are not talking about cash book and trying to figure out the correct amount of the bank statement, we can completely ignore this since the bank charge of 50 has already been included. Okay, now we just need to figure out our total. So the debit side is obviously the heavier one, right? Let's figure out the total. That's 750 plus 570, which is 1,320. And the credit side is only 624. Clearly, the debit side has a higher value than the credit side, which means that our final balance is also going to be a debit balance, right? And the debit balance is just going to be the difference between the debit side and the credit side, which is 1,320 minus 624, which results in 696. This is the balance, and since this is on the debit side, this is obviously an overdraft, right? So we're looking for the amount of 696 in our options, and it is given in option B. That will be our correct answer. Now we can move towards question number 8. We need to figure out what is the purpose of financial statements. So the very first one is to aid managers to manage the business. This is true. So our correct answer is option A. And this is true because financial statements represents all of our incomes, expenses, assets, liabilities, and capital, right? And this would allow the managers to manage all of the assets efficiently so that it can generate more of the revenues in the future, due to which they can get more return from the profits. So option A is definitely correct. Let's have a look at the remaining options as well. The second one is to allow the owner to take drawings. So taking drawings does not have to do anything with financial statements because drawings are obviously recorded, but financial statements does not approve the owner to take drawings. So this is incorrect. The third one is to ensure a profit is made. So if we make a financial statement, sometimes we get losses as well. So there is no ensuring a profit by financial statements. So this is not true. And the last one we have is to ensure the accuracy of the double entry. We can definitely make mistakes while preparing a financial statements. Doesn't mean that we have to be accurate all of the time, which means that our fourth option is incorrect. So the correct one is still going to be option A. Now we can move towards question number 9. An electricity accrual of 375 was treated as a prepayment when preparing a trader's income statement. Now we need to figure out the effect of this on the profit for the year. Okay, let's talk about prepayments. So prepayments are not included in our income statement. So obviously we had subtracted this amount of 375 from the electricity expenses, right? But it was actually an accrual, and accruals are to be added, but it should have been added, right? And we're talking about electricity, which is definitely an expense which should be subtracted in order to get the profit. So let's add a negative to both of these amounts. This is the prepayment and this is the accrual. So for prepayments, it actually increases the profit by 375, but it should have been decreasing the profit by 375, right? So we just need to figure out the effect on this. It should have been this, but we made an error and did this. So the effect is obviously that the profit is higher in this case, right? So profit is overstated. And the overstatement amount is just going to be the difference between these two values, right? So that's a positive 375 minus a negative 375. So that's going to be 375. Two negatives make up a positive. So that's plus 375, which results in our overstatement to be 750. So we're looking for 750 overstatement in our options, and it is given in option B. That will be our correct answer. Now we can move towards question number 10. The draft financial statements of a business show a profit for the year of 64,000 before taking account of the following, and we need to figure out the corrected profit for the year. Okay, so I'm just going to start with our draft profit, which is 64,000. Then the very first one is that The reduction of the provision for doubtful debts by 300 had not been recorded yet. And we're talking about reduction in the provision for doubtful debts, which acts as an income. And incomes are always added in order to figure out the profit, which means that we need to add this value of 300. And the next one is that a purchase of office stationery costing 2400, which had not been entered in the books. So this should be entered, right? And we're talking about purchase, which definitely means that this is an expense. So we need to subtract this in order to figure out our profit. So I'm just going to subtract the 2400. And only 1/6 of this stationery has been used by the year end. And in the income statement, we only record the expenses for this particular year. So the expenses is just the 1/6 of this value of 2400, right? So we only need to include the 1/6 value. So that's 64,000 plus 300 minus 400. And this results in our corrected profit for the year to be 63,900. And this value is given in option B. That is the correct answer. Now we can move towards question number 11. A company receives rental income from letting out 2 properties. Total rental income received. So this is all of the money received from those rental properties. For the year ended 31st December 2019 was 55,000. Then we are given additional information regarding the rent received in advance and the rent receivable in arrears. Now we need to figure out the total amount of rental income shown in the income statement for the year ended 31st December 2019. Okay, in the income statement, we always adjust all of our advances and arrears to the amount that is received, right? So we can start by the amount received, which is 55,000. And now we just need to adjust all these values. So the very first one we have is the rent received in advance at the opening date. So this advance was given at the year before, which is 2018. And it was paid in the year 2018, but it was paid for in the year 2019, which means that this is actual expense for the year ended 31st December 2019, which means that this should be included in our income statement. So I'm just going to add 1840. The second one we have is 31st December 2019, which is the closing date. So this is the advance paid in the year 2019. Which means that this is actually the expenses for the next year, which is 2020, which should not be included in the income statement for the year 2019, right? So I'm just going to subtract this value of 720. Then we have our arrears, and for the opening date, that's 2120. So this is the arrears for the year 2018, since this is on the opening date. So this represents the amount that is yet to be paid as an expense for the year 2018. And since we're talking about the income statement for the year 2019, this should definitely not be included since this is an expense for the previous year. So I'm just going to subtract this amount of 2120. And then the last one we have is the rent receivable arrears at the closing date with the value of 1100. And since this is the closing date, this actually represents the expenses for the year 2019, which are yet to be paid. And we are talking about income statement for the same year, which means that this expense should definitely be included. So I'm just going to add the 1100. Okay, so our rental income shown in the income statement would be 55,000 plus 1840 minus 720 minus 2120 plus 1100, which results in a value of 55,100. And this value is given in option C. That will be the correct answer. Now we can move towards question number 12. Fin provided the following information. We are given the information regarding capital, profit, drawings, and vehicle transfer to business use. Now we need to figure out Fin's capital at the end of the year. So we obviously have to start with the capital at the start of the year, which is given to be 19,800. Then we have our profit for the year, which is added to the capital. So we need to add this value of 24,000 as well. Then we are given drawings, cash as well as goods for own use. Regardless what the drawings is, drawings will always decrease the capital. So we need to subtract both these amounts. So the first one is 19,500 and the second one is 1,100. And finally, we are given private vehicle transferred to business use. So this is capital injection, right, which would definitely increase the capital. So we need to add the value of 6,000, so that's plus 6,000. Okay, and this gives Fin's capital at the end of the year to be 19,800 plus 24,000 minus 19,500 minus 1,100 plus 6,000, which results in the value of 29,200. And this value is given in option C. That will be the correct answer. Now we can move towards question number 13. What would be recorded in a partnership appropriation account? So the first one is interest on capital, which is true. We record this in our partnership appropriation account. The second one is interest on drawings. This is also true. It is included in a partnership appropriation account. The third one is interest on loan by partner to partnership. So this is not included in the partnership appropriation account since this is already included in our income statement while figuring out the profit for the year. And the fourth one is interest on bank overdraft. Again, this is not included in our partnership appropriation account, but instead included on income statement. So the only items included would be 1 and 2, which is given in option B. That is the correct answer. Now we can move towards question number 14. X and Y were in partnership and shared their profits equally. On 1st March 2019, Z is admitted as a new partner. In the future, they will share profits in the ratio X, Y, and Z, 3:2:1. Okay. The net assets valued at 20,000 have lost 8,000 in value. So any assets losing its value would represent the loss in revaluation. Okay, and the goodwill is valued at 9,000 but will not be retained in the books of account. And what will the entries in the capital accounts of Y be to record these changes? Okay, so we need to prepare the capital account for Y. This is the debit side, this is the credit side. So the very first item we have is our loss on revaluation of 8,000. And this loss on revaluation is to be shared by the existing partners. And the existing partners are X and Y, and they share the profits equally. So this loss of 8,000 should be shared equally as well. That's 8,000 by 2, which is 4,000. So 4,000 loss on revaluation is to be beared by Y. And losses obviously decreases the capital account balances, due to which it is to be recorded on the debit side. So that's 4,000. Then we have our goodwill valued at 9,000. And remember that whenever there is a change in profit sharing ratio or an admission of new partner, the goodwill at the old ratio is to be recorded on the credit side, and the goodwill at the new ratio is to be recorded on the debit side. So let's figure out the goodwill according to the old ratio. So old ratio is to share it equally among two partners, right? So that's going to be 9,000 by 2, which results in 4,500. And this is to be recorded on the credit side. So that's 4,500. And now, on the basis of the new ratio, it is to be recorded on the debit side. So that's 9,000. And according to the new ratio, 2 out of 6 parts belongs to Y. So that's going to be times 2 by 6, which results in the value of 3,000. So 3,000 is to be on the debit side. This records all of the changes. So let's figure out the total. The total for debit is 4,000 plus 3,000, which is 7,000. And for credit, that's 4,500. So we're looking for this value in our options. And this is given in option D. That will be our correct answer. Now we can move towards question number 15. The statement of financial position showed the following balances at 31st December 2019. Alright, the net assets at 1st January 2019 were 14,000. Okay, remember here that net assets is the difference between total assets and total liabilities. And if we remember our accounting equation correctly, total assets equals to capital plus total liabilities, which means that capital is equal to total assets minus total liabilities, which means that net assets is just another term for our total capital. So our opening capital is 14,000. Now, property had been revalued upwards by 1,200 during the year ended 31st December 2019. No drawings had been made during the year, and we need to figure out the profit for the year ended 31st December 2019. Okay, in order to figure it out, we already have our opening capital balance, and we are given the information regarding the items in our capital accounts right here. And this is at the date of 31st December 2019, which is the closing date, right? So let's figure out the total capital at the closing date. We just need to add the capital for both the partners. That's 20,000 plus 10,000. Then we have the current account balances as well. And for L, that's 1,000 debit. And the debit current account balances always represent the amount that the partners owe to the business, right? So this should obviously be deducted. That's minus 1,000. And we have the credit balance of 2,500, and this represents the amount that is owed to the partners by the partnership. So that's going to be an addition. Okay, Now this gives the total of the closing capital to be 20,000 plus 10,000 minus 1,000 plus 2,500, which results in 31,500. Okay, now we can easily create an equation. We will start with our opening balance of the capital account. Then we will add all of the revalued upwards. Then we add our profit for the year as well. And this will give our closing balance, right? The opening balance in this case is 14,000. We are told that the revaluation upwards was by 12,000. We need to figure out the profit, and we have our closing balance to be 31,500. Now we can easily figure out the profit. That is just going to be 31,500 minus 14,000 minus 12,000, which results in the value of 5,500. So this is the profit for the year ended 31st December 2019. And this value is given in option B. That is the correct answer. Now we can move towards question number 16. Shareholders are entitled to a fixed annual dividend, with any unpaid dividends being paid out of future profits. What does this statement describe? So we are talking about shareholders, which means that we are definitely talking about shares, right? And they are entitled to a fixed annual dividend. And fixed annual dividend is paid only on our preference shares. So we are talking about preference shares here. But we're also told that any unpaid dividends will be paid out of future profits. So if the dividend is not paid in this year, then it is to be added to the next year and is paid out of the future profits. So we can say that it is being cumulated or added. So we are talking about cumulative preference shares. And that is given in option A. That is our correct answer. Now we can move towards question number 17. We need to figure out which statements about a bonus issue of ordinary shares are correct. The first one is that it will generate extra funds for the company. So remember that whenever a company issues bonus shares, there is no cash flow. So no outside parties is giving in any sort of cash. We are utilizing our own reserves to increase the number of shares. So it cannot generate any extra funds. The first statement is incorrect. The second one is that the company's liquidity is not affected. Like I said before, there is no cash flow, due to which the company's liquidity remains unchanged. So the second statement is absolutely true. The third one is that shareholders can sell their bonus shares. This is true as well, because shareholders are entitled to their shares and they can sell it or buy it in the secondary market. So this is true as well. The only correct statements are 2 and 3, which is given in our option C. That is the correct answer. Now we can move towards question number 18. The following information is available for T Limited. We are given the retained earnings, general reserve, and accrued loan interest for our opening date as well as the closing date. And during the year ended 30 June 2019, T Limited made the following payments. All right, what was the profit from operations for the year ended 30 June 2019? Since we are given retained earnings, we first find out our profit for the year. So I'm just going to create the retained earnings column from our statement of changes in equity. And we have the opening balance of 94,000, right? So that's 94,000. The next item that we need to include is, all right, let's have a look at general reserve. We can see that the opening balance is 50,000, whereas the closing balance is 65,000. So it has increased, right? And the general reserve can only increase if there has been a transfer from retained earnings. So let's figure out the increment. That's 65,000 minus 50,000, which results in 15,000. So general reserve has increased by 15,000, and this can only be increased if the 15,000 is transferred from the retained earnings to the general reserve, right? So we need to include the transfer as well. And transfer definitely reduces the retained earnings balance. So we need to subtract 15,000. All right, the next one is we add the profit for the year. And we are trying to figure this out. So this acts as our balancing figure, right? And the next one we are given is that the dividend paid. And this dividend is paid during the year ended 30 June 2019, which should be included in our retained earnings. And dividend paid definitely reduces the balance, right? So dividend, we need to reduce 60,000. All right, and this gives our closing balance, which is 148,000. All right, now profit for the year acts as the balancing figure, and it is very easy to figure out the balancing figure. We just need to subtract these amounts from the total. In this case, that's 148,000 minus 94,000 plus 15,000, because two negatives make up a positive, and plus 60,000, which results in our profit for the year to be 129,000. but we need to figure out our profits from operations. So profit for the year is just the difference between profit from operations minus the interest paid, right? So our profit from operations is just going to be profit for the year minus interest paid. And we just figured out our profit for the year to be 129,000. Now we need to subtract our interest paid. And the interest paid is given to be 27,000. But we are also given accrued loan interest. So accrued loan interest for last year just represents that this is the loan yet to be paid for the year 2018. So this should not be included for the income statement in the year 2019. So we're just going to subtract the 3,000. And we have accrued loan interest at the date of 30 June 2019, which represents that this is the interest yet to be paid for this particular year. So we need to include this. So that's plus 1,000. Okay, so our profit from operations is going to be 129,000 minus 27,000 minus 3,000 plus 1,000, which results in 25,000. Okay, it seems like I made an error. So interest paid goes to this side. So the negative will act as a positive now. So we need to add the interest paid. Okay, so the profit from operations is going to be 129,000 plus 25,000, which results in 154,000. This is the answer that we are looking for, which is given in option D. That will be our correct answer. Now we can move towards question number 19. Which ratio tells managers how long it takes to receive payment for goods sold on credit? So goods sold on credit obviously gives rise to trade receivables, right? And in order to figure out the number of days that it takes to receive the payment, we figure it out from our trade receivables turnover, which is given in option D. That is the correct answer. Now we can move towards question number 20. The following information is available for G Limited for the year ended 31st December 2019. Okay, now we need to figure out the return on capital employed. So the formula for return on capital employed is just the profit before interest and tax, or our profit from operations. This is just the different terms for the same amount. And then we divide it by our capital employed times 100%. Okay, so we have our profit from operations right here. That's 244,000. Now let's figure out our capital employed. Capital employed includes all of our shares and reserves and our non-current liabilities. Okay, we are given share capital, which should be included. So that's 275,000. Then we have our long-term bank loan, which is non-current liabilities. So we should include this 180,000 as well. Okay, and we have our retained earnings, which is a reserve. So we need to add this amount of 400,000 as well. And this gives our total capital employed to be 855,000. Let's write it down. Times 100%. And our return on capital employed is going to be 244,000 divided by 855,000 times 100%, which results in 28.54%, which is given in option D. That is our correct answer. Now we can move towards question number 21. A company has been asked to prepare a quotation to print 100 leaflets for a customer. The total cost of direct materials, direct labor, and a share of overheads is 820, and a profit of 25% on cost has been added. Which costing method is this an example of? Okay, so our company has been asked to prepare the quotation to print 100 leaflets. So this is a specific job, right? And this might seem similar to absorption costing, but whenever we're talking about specific job, this falls under job costing, which is given in option B. So that will be our correct answer. Now we can move towards question number 22. Which expense for a business may be classified as a stepped cost? So the first one is direct labor. So direct labor increases per unit. So this is definitely a variable cost, right? So this cannot be termed as a stepped cost. The second one is direct materials. Again, this is associated with each unit, which is a variable cost. Then the third one is factory rent. So factory rent remains constant for a specific factory. But if we are to increase our factory numbers, then obviously our cost increases, right? So we can term it as a stepped cost. This will be our answer. And the fourth option we have is telephone. So telephone cost obviously increases per calls made, right? So this is also a variable cost. So our correct answer is still going to be option C. Now we can move towards question number 23. The inventory movements of a business in a 3-month period are shown. All right, so these are the purchases made and these are the units sold. Now the business uses the first in first out method of inventory valuation. What was the value of inventory at the end of March? Okay, so firstly we sell 50 units and we need to sell those units from the first bought batch, which is right here, right? So out of 100 units we sold 50. So the remaining is going to be 50 units. Then we sold 200 units. Again, we need to use the first bought inventory, right? So we use the 50, right? Then we have the remaining 150 units out of 200 units. So the 150 is sold from the second batch. And now from the second batch, we have 50 units remaining. And the remaining units is our inventory, right? So the inventory value would be for the remaining units for the second batch, which is bought at 6 per unit. So we need to multiply it with that rate, which gives the value of inventory at the end of March to be 300. And this is given in option D. That will be our correct answer. Now we can move towards question number 24. A company uses absorption costing based on predetermined absorption rates. Alright, which statement about absorption rates is correct? So the first one is they will be based on budgeted costs and outputs. We are told that it is predetermined, so obviously before the actual data comes in, we already have our absorption rates, which might be based on budgeted costs and outputs, which is given in option A, so that is our correct answer. But let's have a look at the remaining options as well. They will be calculated only when actual costs and outputs are known. If that is the case, then we cannot say that our absorption rates are predetermined, which makes our second option to be incorrect. The third one is that they will be changed each time outputs and costs change. So if it is fluctuating, we cannot predetermine it for each cases. Again, this is contradictory, so option C is incorrect. Then the last one we have is they will be set for a period of more than 1 year. So budgets cannot be that long. And absorption rates, obviously, for a period of more than 1 year, we can actually have our actual costs and outputs, due to which we can adjust our predetermined absorption rates to the correct one. So in this manner, option D is incorrect as well. So our correct answer is still going to be option A. Now we can move towards question number 25. A business absorbs fixed overheads using direct labor hours. And we are given the following information. We need to figure out which statement is correct. So basically, we need to figure out whether the overheads were underabsorbed or overabsorbed. Alright, for the actual overheads, it is based on 16,300 direct labor hours. So we need to figure out our budgeted overheads based on the same number of direct labor hours. Okay, for 15,000 hours, we have our budgeted overheads to be 525,000. Let's use unitary method. So for 1 hour, that's going to be 525,000 divided by 15,000. And we require it for 16,300 hours. So that's 16,300 hours. That's going to be 525,000 divided by 15,000 times 16,300, which results in the value of 570,500. All right, we can clearly see that compared to the actual overheads, budgeted overheads is greater, right? And if that's the case, it results in overabsorption. So our overheads are overabsorbed. Now, in order to figure out the overabsorption amount, we just need to figure out the difference between those two overheads. So that's going to be the budgeted of 570,500 minus the actual amount of 525,000, which results in the value of 45,500. So we will be looking for overabsorption of 45,500 in our option. And 45,500 is given here, and this is overabsorbed. So our correct answer is going to be option C. Now we can move towards question number 26. The data relate to the production of 3 products. We have product X, product Y, and product Z. We are given the contribution per unit, fixed overhead per unit, and labor hours per unit. The company is experiencing a shortage of labor. So our scarce resource in this case is labor, right? And now we need to figure out in which order should the products be ranked to maximize profit. So whenever we are trying to maximize the profit, we should be figuring out the contribution per scarce resource. All right, so for X, Y, and Z, we need to figure out the contribution per labor hour. So we have our contribution for product X to be 160, and we just need to divide it with the labor hour, which is 1. And this gives our contribution per labor hour for product X to be 160. For Y, that will be 175 divided by 1.25, which results in the contribution per labor hours for product Y to be 140. And for Z, that's 190 divided by 0.75, which results in the value of 253.33. Okay, so now we need to rank these in order to maximize our profit. So the ranking system will always begin with the higher first. In this case, the contribution per labor hour is highest for product Z. So we will be prioritizing product Z first. Then the second highest is for product X. So we will be prioritizing product X next. And lastly, we will be prioritizing product Y. So our order is Z, X, and Y. So we're looking for this in our option. And ZXY is given in option C. That is the correct answer. Now we can move towards question number 27. A company has the following budgeted information for May. We are given the selling price per unit, variable cost per unit, and total fixed cost. The company is planning to buy a new machine which will reduce the variable cost by 20%. Let's reduce it. So that's 80 times 1. Since we are reducing it, that's a negative. 20% can be written down as 0.20. And this gives the new variable cost to be 64. Then we also increase the fixed cost by 20%. So let's increase it. That's 56,000 times 1 plus 20%, which results in the value of 67,200. This is the new variable cost. Now we need to figure out the change in break-even sales in units. Okay, let's figure out the break-even sales for the previous information. So BP is just the fixed cost divided by contribution per unit, right? And we have our fixed cost to be 56,000 previously. And our contribution per unit is just the difference between selling price and variable cost. So that's 120 minus 80. And this gives the break-even point in units for the previous data to be 1400. Okay, now we need to figure out the BP for the new information, which we calculated already. So we start with the fixed cost, which now is 67,200. And the contribution is just the difference between selling price and variable cost, which in this case, the selling price remains constant at 120, but our variable cost is 64 now. And this gives the new break-even points in units to be 1200. So we can clearly see that previously it was 1400, whereas now it is 1200. So there has been a decrease, right? So the decreased amount is just the difference. So that's 1400 minus 1200, which is 200 units. Okay, so we are looking for a decrease by 200 units in our options, and that is given in option B. That's the correct answer. Now we can move towards question number 28. What does cost volume profit analysis assume causes costs to change? So the first one is production methods. That is incorrect. The second one is sales mix. That is incorrect as well, because we only talk about cost, volume, and profit. And the third one is sales volume, which includes volume, right? So this is the one that causes cost to change according to the cost volume profit analysis. So 3 is only the correct one, which is given in option D. That is the correct answer. Now we can move towards question number 29. A business has a sales revenue of 400,000 and a total fixed cost of 140,000. Its contribution to sales ratio is 40%. Now, what is the sales revenue if the profit for the year increases by 40%? Okay, so we do not have contribution right now, but we have the information that the contribution to sales ratio is 40%. Let's figure out the contribution. We already have the sales revenue of 400,000 times 100% is 40%. So the contribution is just going to be 40 divided by 100, because the percentage cancels each other out, times 400,000. And this gives our contribution to have the value of 160,000. All right, and we are talking about profit. So let's figure out the profit for previous case. Profit is just the difference between contribution and fixed cost. So that's 160,000, which is the contribution we just figured out, minus the fixed cost of 140,000, which results in the value of our profit to be 20,000. All right, and now we are increasing the profit by 40,000. So we just need to add the 40,000, which gives our new profit to be 60,000. All right, and according to this profit, we now need to figure out our contribution so that we can figure out the sales revenue from our information regarding the contribution to sales ratio. Okay, let's figure out the contribution. The fixed cost remains unchanged, so that's going to be 140,000, and this gives our new profit of 60,000. Okay, so our contribution is now going to be 60,000 plus 140,000, which results in 200,000. Okay, and we have the information that contribution by sales is 40%, and we have our new contribution of 200,000. We just need to figure out the corresponding sales value, right? And the sales value is just going to be 200,000 times 100 by 40, which results in 500,000. Okay, and 500,000 is given in option D. That is the correct answer. Now we can move towards question number 30. Budgetary control systems have just been introduced by a company, but employees have not achieved their targets. And reasons given for this are as follows. Which reasons should be considered when evaluating employees' performance? So the first one is budget was unrealistic. So if the budget is too unrealistic, then obviously the employees cannot achieve their targets, right? So this is definitely a reason to be considered. The second one is that the actual training conditions differed from budget assumptions. So if the actual training conditions is not met as to the budgeted ones, then obviously the employees might have not been that efficient in achieving their targets, which means that this reason should definitely be considered as well. And the third one is that the workforce needs more training. We are told that the employees have not achieved their targets, so maybe they lack in some sort of training. So maybe they lack some sort of skills which could be enforced by some more training, which means that our third reason can also be considered. So we are considering all three reasons, and that is given in option A. So option A is our correct answer. Now this brings us to the end of this paper. If you found this video useful, make sure you like the video and leave a comment below, and make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.